All right. Happy New Year, folks. Hope you had a great New Year with your friends and family. The purpose of today's webinar is to discuss DoublePositive's mortgage products, including loan modification. Wanted to start off the new year on the right note and basically allow you as our prospects and buyers to understand our products fully and decide which one is appropriate for you to be in going into the new year. My name is Joey Liner. I am co-founder and Executive Vice President of Sales for DoublePositive Marketing. I have been with the company since we started back in 2004. Today's webinar's format is we are going to discuss who we are a little bit, what we do, obviously want to make sure you understand what our core product is, and then talk about specifically each mortgage product, and then lastly go into question and answer. So if you do have any questions, excuse me, my voice is a little raspy from a cold, but if you do have any questions, please post them into the window and I will get to them at the end of today's webinar and be glad to address those for sure. All right, so let's jump right in. All right, so DoublePositive, we started back in 2004 in Baltimore, right here on the waterfront. In fact, this is where our office is, right here, facing the water. We got venture capital money and through 3 different rounds of funding, and we have 12 employees. We've done over 300,000 live call transfers since we started. Companies that are in our area that you may know are advertising.com, which is well known for most of the advertising across the web, Under Armour, which is the largest sports apparel now company, through all different levels of sports, and they're well known for their skin tight sports apparel. Imagination, one of our management team members, was a co-founder of technology company here in the Baltimore area, and then the Loan Page was our former company, where that's how we got into the lead generation business. I want to jump right into the sales process. What do folks that typically buy leads do every day when they buy internet leads? They go off and they try to dial outbound, right, and establish contact. They spend about 50% of their time trying to establish contact. The other 50%, it's just too hard to get on the phone. So half the time you will make contact. If you call the leads 3 or 4 or 5 times a day, you will be able to get in touch with, about 50% of the consumers. Out of that, 30% are actually probably interested and are qualified because you have the other 20% that you do make contact with. That includes like, I don't have time right now, or my spouse is the one that makes the decisions and they're not here right now. Those are some examples of how you would make contact, but they're not the decision maker or the interest in qualified lead that you want to speak to. Now, out of the 30% of the folks that are interested and qualified, 20% will give you the time to actually get into the sales process. And we take these numbers from our years of experience and 7 years of lead generation experience, going back to, like I said, the loanpage.com, now doing hot transfers since 2004 at DoublePositive. But basically our point here is that out of that 30%, only 20% are actually going to allow you to speak to them to have a meaningful conversation, because they may acknowledge that they filled out the form, but they changed their mind, or they already have a good rate, a competitive quote from our competitor, et cetera. So what does DoublePositive do? We actually establish contact for you. You will spend 0% of the time doing that. We also confirm interest and qualify the lead, as I mentioned earlier. You won't have to worry about doing that 0% of the time. That is all the responsibility of DoublePositive, because we want to allow you to sell 100% of the time. That's the goal of this company, is to keep good sales folks more productive without you having to do all the outbound dialing. And I'm going to explain that here further. Again, time should be calculated in the cost of per sale. Most folks that look at marketing, they just look at, what did I pay to acquire a new client, or what's my return on investment? But they don't factor in time. Time is essential in calculating how successful you are and productive with your marketing. Meaning, my first example here, you could spend about 80% of the time trying to establish contact with a penny lead that you buy off a raw list. And you may qualify a couple of those leads and sell one a week or one every other week, and you only spent $500 or $400 to acquire that client because you're only paying a penny per lead, but you had to make so many outbound contacts 80% of the time or 90% of the time just to try to get them on the phone. So you got a sale for $500. It only cost you $500 to get the sale, but you're not looking at the time that you invested and how long you were trying to get that sale. Same thing with internet leads. Our point earlier in the slide, the first slide, you spend about at least 50% of the time trying to establish contact. Hot transfers, we want you to sell 100% of the time. What we do, we will take an interested consumer that has filled out an application on the web or called into one of our inbound call center agents through one of the ads on the web. They are interested because they obviously have seen the ad and they would like to find out more. We will then go ahead and outbound dial the lead, step number 2 here, and acknowledging that they are genuinely interested and want to have a meaningful conversation with a sales professional. Step number 3 is the live call transfer. Once they have confirmed that they would like to speak to a professional, we will place them on hold and then live call transfer them into your organization and allow you to start the sales process. The leads come into us each day through our real-time web engine. It's called a web service. We take the leads through our partners and suppliers. They send them to us. We do scrub the data to make sure that we get rid of the Mickey Mouses, the 555-1212 numbers before we even send it to this call center. We actually score it based off our own historical algorithm internally. You know, basically want to know if the consumer has a Yahoo or Gmail account, because sometimes there's a higher probability if they have their own internet domain that they could result in a transfer, or the time of the day is essential in scoring the lead, because if it's during our normal business hours, we want to obviously put that through to our call center agents compared to a lead that comes through in the middle of the night. So there is you know, a pretty good sophisticated scoring system that we have here in regards to getting the leads out. Step number 4, outbound optimization. Getting them to the right order or the right program to make sure that they are going in the hands of the right sales professional. Now, we keep the lead in our call center queue for a minimum of 5 business days. Typically, we dial lead about 4 times a day on average. The best attempt, and I'll show you a chart here at the end of the presentation, the best attempt is to actually get them on the horn right away. So as soon as they fill out the form, we want to get them on the line, verify their intent, and then transfer them over to the call to the sales professional. Excuse me.